we're not in the territory that we're in October, by any means, but which was a crazy one-off, once-in-a-lifetime event. But fundamentals are getting stronger, even as the price has gone up. Now, does that mean that you'll see $60 silver by?
Silver started the year around 29, and we're now at 57.30. Yes, we're down from the high. High yesterday, it was 58.88. I think in the spot, almost 59. And I'm hearing again that Middle East central banks, what they're doing now, they're buying silver straight from the mining companies, and they're buying future production as well. You got to hold on as well to your gold and silver for dear life, because it's going to get more and more choppier. But I can promise you, because I've been doing it for over 20 years, the more immune you get to these moves, the easier it gets as the market keeps going higher.
Recent market action shows we are far from the historic volatility experienced in October, yet the underlying fundamentals for precious metals continue to strengthen even as prices rise. Analysts Keith Weiner and Innecco emphasize that silver's climb, from roughly $29 at the start of the year to over $57 today, reflects deep structural demand rather than speculative excess. Middle Eastern central banks are now bypassing traditional exchanges, securing metal directly from miners, and even locking in future production. That shift alone signals a tightening physical market and a new layer of geopolitical demand. Both voices stress that gold and silver holders must remain disciplined amid rising volatility. As prices advance, market swings naturally intensify, but longtime stackers know that emotional resilience becomes easier with experience. The trend remains firmly higher, and the forces beneath it are growing, not fading. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
The price of gold has gone up massively, but salaries have not. And so what it means is people buy less gold by weight. If they would have bought a 10-gram bracelet, now they're buying a 5-gram bracelet because they have the same amount of money, same amount of currency anyway, and you buy half as much gold as you did a year ago or 2 years ago. So, the jewelers are selling, there's other reasons why sales volumes have picked up, because people are becoming more agitated about the currency. But so people are increasing their commitment to gold. But the amount of gold you can get for the same buck is going down. So the jewelers are getting whacked, both ways. So, there's increasing buzz about silver jewelry, which is not, especially in India, but, I think Turkey, the Arab world, silver is not the first choice. But it's what you can afford when you don't get, there's an expression I heard, people in hell want ice cream, doesn't mean they get it. The average day laborer wants gold, doesn't mean he can get it. So, they turn to silver, and so the demand for silver has been way up, and that perhaps could explain the silver price action. Just one little random rant, if I may. When the gold price goes up, everybody has to have either a conspiracy theory or whatever. Oh, it's central banks that have driven it up. Okay, well, silver is going up even more than gold, obviously, in the recent go round. That's not central banks. Central banks aren't buying silver. So who is? Well, there's, more investment / jewelry demand, whatever you want to call it, from people who just are priced out of gold, or you can't get enough gold to be interesting, but you can get a lot of silver. Right? So suppose you had $200. How much gold can you get for that $200? Well, 20th of an ounce, right? How much silver can you get? Well, heck of a lot more, 4 whole ounces, or a bit under 3.5 ounces now. So, they're turning to silver, and, we've had big demand in silver, obviously driving the price up. There was a backwardation in silver, the likes of which I've never seen in all the time I've been following the market in October, spiking the silver lease rate as London measures it, causing all kinds of dislocations in the market. And so, conference like Dubai Precious Metals Conference, it's not investors saying, happy, joy, because gold and silver beat Bitcoin this year. It's the trade saying this is causing us real consternation in our businesses. And yes, to the extent they all have gold on balance sheets, to the extent they have gold, they're happy that they've made a profit in dollar terms or in dirham terms. But it's causing real problems in the business. Predicting the timing of these things is essentially impossible. Monetary Metals, we publish essentially fundamentals of the market as we measure it, and I've written all these papers as to why these are the fundamentals. But, the fundamental doesn't tell you whether the move is going to be tomorrow morning or whether it's over the next 18 months. And there can be a correction along the way too. What we can say is that in gold, as the price has gone up, the fundamentals remain pretty flat, which actually is interesting because the historical pattern, the long dark period of second half of 2011 through 2018 into 2019, every time the price would go up, the fundamentals would get worse. And what was happening was the price was only going up because people, speculators in the futures market, who, by the way, use great leverage, were making big leverage bets on the price and driving the price up, trying to front run what they thought was, the rumor that the Bank of Ireland was going to buy this central bank or that central bank or whatever. And they end up front running only themselves. And then eventually when everyone's all in, they start to go for the exits and, the price comes down. And that happened over and over and over again. Price goes up and with it, basis goes up. Okay. That was the pattern for a long time. And every time that happened, the gold bug community would write, that's it, this is the moonshot, and they'd have pictures of rockets on their articles and stuff. And I would always put out this little article saying, this isn't the moonshot you're looking for. Or I would quote Aragorn, the day will come when silver will be $50 and more, but today is not that day. I can't say how many times I overused that until that cliche was completely worn out between 2012 and 2018. And they called me a perma-bear. Keith hates gold. Keith works for the Fed, wants the Fed to win. The guys didn't get it. So now we see rising price, and in gold, the fundamentals are not softening. Now they're not firming up either, but they're not softening, which, given that the price has now been picking up again, is notable. Now in silver, the fundamentals are actually getting firmer as the price is going up. And so now we're not in the territory that we're in October, by any means, but, which was a crazy one-off, once in a lifetime event. But, fundamentals are getting stronger even as the price has gone up. Now, does that mean that you'll see $60 silver by end of year? That's a mug's game that I don't want to play, but there's a generally rising price trend. It's a trend. It's a mega trend, right? This is global. This is a durable trend. And, will there be corrections along the way? Yes. Will the price trend higher? Yes. What's going to happen in what order, to what degree? The market's going to unfold. But if you want to make a bet on silver and don't get crazy with leverage, you could argue there are plenty of worse times for doing it than now. And why? Because the monetary system is turning to bleep.
Rising gold prices have widened the gap between what people want and what they can afford, especially in regions like India, Turkey, and the Arab world. As wages fail to keep pace with gold's surge, consumers who once bought 10-gram pieces are now limited to 5-gram pieces. Jewelers are being squeezed from both sides. Higher prices reduce the volume of gold sold, while currency anxiety pushes more people toward precious metals overall. That shift has ignited a surge in silver demand, particularly among households priced out of gold but still seeking a durable store of value. Keith Weiner explains that silver's appeal is magnified by its affordability and the extreme backwardation seen in recent months, a sign of real stress in the physical market. Despite inevitable volatility ahead, the broader trend remains firmly upward.
What's been happening and what happened back in 2019, as you can see by this chart, is that the Fed had to intervene. They had to bail out the repo market because financial institutions didn't trust each other. They thought there was something wrong. So they wouldn't even do a repo overnight with other institutions. And if they did, they were charging like 10% at one point, and the Fed funds rate at the time was like 2.25%. Usually the repo rate should be close to the Fed funds rate. So that, as you can see here, the Fed had to really step in back in 2019 and 2020. Yeah, and they started as well a massive amount of QE, as you can see here. Some people are saying maybe the repo market is picking up again, or the Fed's having to intervene because the bullion banks are in trouble, and it's highly possible. So I think we really need to keep an eye on the repo and repo market. It is flashing warnings. Back in September 2019, I remember covering it, and a lot of people were saying, and me included, that it could lead to a big problem. Then eventually it did. Yes, gold yesterday and silver did very well. We're seeing a little bit of a correction here. As always, markets don't go up or down in a straight line, but I think silver still looks really good. It's all kind of relative and psychological. I mean, silver started the year around 29 and we're now at 57.30. Yes, we're down from the high. High yesterday was 58.88. I think in the spot, almost 59. And I'm hearing again that Middle East central banks, what they're doing now, they're buying silver straight from the mining companies, and they're buying future production as well. They're doing deals with them. Hopefully, the mining companies are not selling it too cheap forward. But why are they buying from the mining companies? Why don't they just buy from the exchanges? Well, I suspect there is not much physical silver to buy, and that's why they're buying from the miners. The other thing as well, if these foreign central banks start acting, or if they start buying a lot of futures on COMEX to take delivery, it's not gonna happen. The regulators, the U.S. Treasury, they're gonna stop that right on its tracks, just like they stopped the Hunt brothers. But this time, though, it's more than just the Hunt brothers. It's a big chunk of the world wants silver. And so does the United States, so does China. They've made silver a critical mineral. And yes, with what's going on monetarily as well, silver and gold are becoming more and more important. People are going to wake up and realize that they've been lied to about what money really is. Well, you've been awake if you've been listening to me for the last 10 years or so. So you don't have a problem. You'll be able to protect your savings. Hopefully you have been stacking some physical gold and silver. Hopefully you have some silver miners as well and gold miners in your portfolio. But as I said, we're down a little bit. Gold is at 42.14, down $17. Low's been 41.93, and the high 42.36. Yeah, we got up to, I think, 65 yesterday, 42.65. I think 42.45 is a key resistance. It's a previous high that we've seen in the last month or so, and I think they're trying to keep it below that level. Silver is at 57.30, as I said earlier. It's down 67 cents, or just over 1%. The low's been 56.57. So, yeah, we're going to continue to see volatility. And as I've said many times, you got to be right and sit tight. You got to hold on to your hat. All these sayings apply, and you got to be patient, and you got to stick to it, and you got to hold on as well to your gold and silver for dear life, because it's going to get more and more choppier. But I can promise you, because I've been doing it for over 20 years, the more immune you get to these moves, the easier it gets as the market keeps going higher.
The stress signals emerging across funding markets are beginning to resemble the ruptures first seen in 2019, when the Federal Reserve was forced to rescue the repo system after institutions stopped trusting one another. That same strain appears to be resurfacing, with growing speculation that bullion banks may again be under pressure. At the same time, gold and silver continue to behave like monetary barometers. Brief corrections, strong rebounds, and steady accumulation from regions such as the Middle East, where central banks are now bypassing exchanges and securing silver directly from miners. Innecco notes that physical tightness is unmistakable, and any large-scale attempt by foreign buyers to take COMEX delivery would likely be blocked just as aggressively as the Hunt era. For long-term holders, the message remains simple: stay patient, hold your mettle, and ride the trend higher. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.